All right, let's just jump right in. For ages, the financial world was a kingdom ruled by one undisputed power: traditional banks. But then, a new challenger, born from pure code and cryptography, basically stormed the gates. And that's what we're talking about today, this huge, high-stakes battle that is literally rewriting the rules for our money.
Now, you might be thinking this is just about some new technology, right? A flashy app or something. But no, this is so much bigger than that. What we're really watching is a fundamental power struggle over who controls the very plumbing of the global economy. And the outcome of this is going to directly affect how you save, how you spend, and how you invest for years to come.
So, to really get what's at stake here, we first have to look at the old guard. We need to appreciate just how immensely powerful the traditional banking system really is. I mean, we're not just talking about a business. For over a century, it's been more like an impenetrable fortress.
And a key piece of this is a concept called the regulatory moat. It's a brilliant term, actually. Think about it. For more than 150 years, the government has basically said, hey, banks, you guys are special. This gives them exclusive VIP access to a federal safety net. You know, things like FDIC insurance and a direct line to the Federal Reserve. And at the same time, this system creates a maze of regulations that's just incredibly difficult for any new competitor to navigate. It's a protected status, really.
So that exclusive access, it became their superpower. They were the gatekeepers for pretty much every essential financial service you can think of. And what's wild is that even after the 2008 financial crisis, the new rules that came in were meant to create stability, but they actually ended up making the banks even more dominant. The big takeaway here is that banks weren't just businesses, they were government-sanctioned fortresses. And that is a very, very tough wall to break down.
But then, something completely new showed up. A challenger that wasn't built with bricks and mortar, but with lines of code and decentralized networks. And its whole purpose was to operate completely outside those old fortress walls.
We're talking about decentralized finance, or DeFi. And look, this wasn't just some new product, it was a whole new philosophy. It was this radical idea for a financial system that just doesn't need a bank in the middle. For the banking industry, I mean, can you imagine? This wasn't just competition. This was an existential threat to their entire business model.
So let's break down how. Crypto came straight for the jugular, attacking the very things that make banks so profitable. You've got the potential for deposit flight, the fear that people would pull their money out and put it into digital assets. It offered faster, way cheaper payments that could just decimate the bank's fee models. And it could bypass banks entirely for things like loans, creating whole new payment systems that the old guard had zero control over.
So when you're facing a threat like that, what happens next? The fight moves. The battleground shifted from the marketplace straight to the halls of power in Washington, D.C., and that sparked what was basically a full-blown lobbying civil war.
And the numbers here are just staggering. $245 million. That's how much the crypto industry spent in just the 2024 election cycle. Let that sink in. This wasn't about asking for a seat at the table anymore. This was about buying the table, the chairs, and the whole room. They became one of the most powerful influence machines in the country, seemingly overnight.
And you know what? It worked. That spending blitz completely changed the game. It put a stop to what everyone called regulation by enforcement, where agencies like the SEC were just suing everybody left and right. In its place, we got actual laws. Landmark bills like the Genius Act set up a clear framework for stablecoins, and the Clarity Act finally sorted out the turf war between the SEC and CFTC. The industry got the one thing it wanted most: clarity.
But here's where the story takes a really fascinating turn. This huge victory in Washington did more than just make crypto legit. It led to a totally surprising new alliance between the disruptors and the very establishment they were trying to overthrow.
See, U.S. policymakers started to see a massive strategic opportunity. They embraced this new policy that's been called crypto mercantilism. Now, it sounds complicated, but the idea is actually pretty simple. Use privately issued dollar-backed stablecoins as a tool to project American financial power and reinforce the dominance of the US dollar all over the world. So how does that work? Well, since over 99% of stablecoins are pegged to the dollar, the more they get used around the world, the more demand there is for US dollars. And here's the kicker. To back up those stablecoins, the issuers have to buy tons of super safe assets, which mainly means US government debt. All of a sudden, stablecoins became this unexpected, incredibly powerful tool for American foreign policy.
And if you want to understand the sheer scale of this, just look at this chart. As a group, stablecoin companies now hold more US treasuries than entire nations, like Saudi Arabia. Think about that.
They've become this new digital pillar supporting U.S. finances on the world stage. It's just incredible.
So the war didn't really end with a knockout punch. Instead, it's evolved into this much more complex landscape of intense friction, but also strategic partnership. The two worlds started to merge.
And don't get me wrong, fierce conflicts are absolutely still happening. A perfect example is the ongoing battle over your financial data. The banks argue that crypto and fintech firms are free riding on the billions they've spent on security. But the crypto side argues that banks are just trying to bankrupt fintechs by charging these anti-competitive fees to block that access. It's a huge tug of war.
Yet, at the exact same time, we're seeing this new era of cooperation. I love this quote from BNY Mellon, one of the oldest banks in the world. They're saying it's not about replacement anymore, it's about coexistence. The traditional finance giants are finally recognizing that they have to adapt and integrate this technology, or they risk getting totally disrupted.
And this has led to a sort of institutional mashup. The lines are just completely blurred now. You have major banks using blockchain technology to create massive efficiencies. And at the same time, you have these crypto-native firms getting official federal charters, effectively becoming part of the very establishment they once set out to challenge.
So all of this, the conflict, the lobbying, the surprising geopolitical alliances, it brings us to the ultimate question, the big takeaway from this incredible transformation of our financial system. You see, the struggle isn't about one side winning and the other side losing anymore. The real question now is how these two powerful forces, these former enemies, are going to collaborate and compete to build our new financial world. The winner isn't a single entity, it's the hybrid system that they're creating together. So what do you think this new landscape is going to look like? We'd genuinely love to hear your thoughts, so drop them in the comments below. Thanks for watching, and we'll see you in the